What's going on, guys? Cassidy Burns here with BPG Holdings, and today I'm going to be going over the 50-year mortgage and how that affects us as consumers, as buyers, and also as property owners. So there's going to be two different implications depending on if you own real estate currently or if you are looking to get into real estate ownership. So I made this post on Twitter and posted it on a lot of different social medias, and I've had a lot of really good feedback on this and a lot of good questions. So I'm going to try to answer them here. If you do have questions about my thoughts or if you have feedback, put it in the comments. So if you haven't already, Trump has brought up the potential addition of a new product in the lending space for residential real estate. That is adding a 50-year mortgage product to that arsenal that lenders and debt can use. So right now, the standard is the 30-year mortgage. Historically, it used to be just 15-year mortgage. So as you can see, as prices continue to increase, they continue to increase the amount of time that you can borrow money for a property. And this is for residential investment real estate as well as residential primary residence real estate. So here are some of my thoughts and how I think it's going to affect the real estate market and us as the consumers. One, if you own real estate right now, currently, you are in a good place because you control the asset. So, what happens when they add this product of 50-year mortgage is that now there are more people that can afford to buy the property that you currently own or live in, which causes more demand, which will cause prices to increase. So, if you own real estate right now, I think you're going to see a nice bump of appreciation. If I had to guess, I would probably say 5 to 10% within the first 2 years of this product being released, because there are now more buyers that can qualify to buy your particular house. And with that, causes more demand. With more demand, causes prices to increase. So if you own real estate right now, I think you're going to see a really big, good appreciation bump. And then it's going to be your decision, financial decision, to say, okay, how do I access this equity? One negative about real estate as an investment vehicle is that it is not very liquid. So you have to do a disposition. A disposition is either you sell the property, so you could capture that equity through the sale of the asset. You sell it to one of those buyers who now has created the demand, and you take your equity pay down that you've paid down, plus the appreciation, plus this additional forced appreciation that I believe is going to be created with this 50-year mortgage. You can do a cash out refinance, but you can't refinance. But you cannot, sorry about that, but you cannot refinance into a 50-year. You're going to have to refinance back into another 30. Or if you really want to try to pay that off, a 15. Or you can do a HELOC, home equity line of credit, which I think is the best option because you get to keep the property and capture the equity there. Kevin, if you continue to listen, I'm going to touch on that. So if you don't own real estate already, you are going to have the exact opposite effect of the person that does own it. You're now going to be buying a property in a high demand market, which means that your basis that you're going to be buying these properties at is going to be higher. Basis is just the value that you are purchasing that building at from your acquisition date. So if you wait to buy a property with that 50-year mortgage, once this 50-year mortgage has been released, the demand is going to be created. That prices have increased because now there's more. The houses are now technically more affordable from a monthly payment perspective, which means that you're going to be buying it at that premium price point, which means that you're going to have more of an appreciation in the future. So I think there is value in buying something earlier, sooner or before this product is released. If you buy this with this product with a 50-year mortgage, your equity gain will be very, very, very limited. So with mortgages, and the same goes with a 30-year mortgage, they are front loaded with interest, which means that you're going to pay a majority of the interest on the front end. And as you make payments, your principal slowly starts to increase. With a 50-year mortgage, now, if you're buying $1 million house, you're going to finance that $1 million, depending on your down payment, over the next 50 years. So that 50 years now has been extended, which means your payments will be less, but your principal that's going towards those payments, especially in the first 3 years, is going to be little to none. And this is going to cause owners. So right now in a 30-year mortgage environment, you don't make money from a sale if you sell within the first 24 months. So if you purchase a property and then you expect to sell it, unless you're flipping, this is just as a traditional primary residence or investment product. If you buy a property with primary residence financing and you sell it within 24 months, you are not going to make any money. You actually may have to write a check to do so because you have closing costs, you have commissions, you have fees that are associated with the sale and the purchase of that asset. And the appreciation has not done its job. So historically in the DC area, 2.5% to 3% is the standard. So if it's continuing to increase by 3% every year, you have not seen enough appreciation to cover those costs. So you should, if you're going to buy a property, you need to own it for at least 3 years in a 30-year. I think this break-even point is going to be 7 years with a 50-year mortgage. So you're going to have to own this property for 7 years to make any dollars or make any financial sense if you do go to sell it. So it's going to cause the equity in those properties to be very, very minimal. So the reason that we buy real estate is appreciation, right? That's when the market increases. Cash flow, that's when we have more income that comes in versus expenses going out. Equity pay down. Equity pay down is when you are making those payments and it slowly is building your nest egg. And then eventually you're going to capture it through a disposition. And tax benefits. This really gets rid of number 3, or equity pay down, if you do a 50-year mortgage. So you have to know that when you are evaluating whether you should buy property. Residential versus commercial. I think that this is going to greatly affect the residential market. Again, causes more demand, creates more buyers in the marketplace, in a market that already doesn't have enough housing stock for the individuals that's necessary. But it's not going to affect commercial, retail, office, flex. This does not affect you. This does not pertain to you. They're not changing the lending limits for that investment type product. Now, I do think it's going to affect multifamily. And I own a lot of multifamily rental real estate right now. How this is going to affect multifamily is multi is based on net operating income. So it's the income that comes in minus the expenses that go out is your NOI. Multifamily does really, really well in high interest rate environments because high interest rates make housing less affordable. It's unaffordable to go and purchase, you as a primary residence buyer or first-time home buyer, to go buy that house. It's cheaper for you to actually go rent an apartment or a house than it is to buy right now. This 50-year mortgage is going to cause that to switch. So now the tenant that is living at one of my apartment buildings can go and buy their own home. They become the homeowner. Doesn't mean it's the best decision because they're, again, with what we've talked about with the equity pay down. But they now can go buy and it'll be very close to the same as renting. So why would you rent if you could go buy with this 50-year mortgage product? So it's, in my opinion, it's going to cause multifamily product to actually decrease in rents. I don't know how much. Again, we don't know how this is going to affect and how much payments will be and how much of a discount they will be from the 30-year. But I do believe multifamily is going to struggle for the long term with this. The rich keep getting richer, and this is because the reason that they're doing this is that banks understand that they can tie us as the consumers to an asset, right, which is the house, for a longer period of time, which means that their money is going to be worked and locked in for a longer period of time. So they are going to be able to lend that money to us for 50 years, and I believe at a higher interest rate. So now they know that there's been affordability created. They're not going to pass all the affordability on to the consumers. They're going to increase the interest rates. Interest rates will increase with this product, for sure. The stock market, right? This is a case where I actually believe that investing into the stock market may be more beneficial than buying a house as a primary residence buyer using a 50-year mortgage. And that's because the stocks are going to still have their same appreciation value. And actually, with more affordability, is going to create more income and more money that's going to be pumped into the economy because people have more money, spendable money. So they have, doesn't mean that they're going to stop spending, right? The banks are now going to loan us a lower DTI or maybe at the same DTI so you can buy more house. But then you're still going to spend the money in the economy that you make. That's just natural behavior of us humans. So it's going to actually potentially increase the valuations of these companies because there's more money being spent on products, services, and goods. And because of the lack of equity pay down, and I think the slower appreciation once this market and this product comes out, I don't know if it's the best decision for a lot of people. I know that owning your own home is the American dream, but this could be a negative for that dream. The key is we have to think long term. And the one analogy that I was using was was quality of life and also the length of your life. Right now, the average home buyer, first time home buyer, is 31 to 32 years old. If you buy at 31 years old, if you buy a primary residence with a 50-year mortgage, you will have debt or a mortgage until you are 81 years old. 81. The average life expectancy of a man is 74. So actually, you will never have that asset fully paid off unless you're making excess payments to pay down that asset, which doesn't make sense. Why would you do a 50-year mortgage if you're going to do that anyways? So think long term. If you're older, you probably shouldn't do a 50-year mortgage. If your plan is to pass this on to the next generation as an investment, you probably shouldn't have a 50-year mortgage. If your plan is just to have ownership of a home and you know that's where you want to be forever, maybe it is worth doing that and then coming up with a plan to then financially say, okay, I'm going to buy this house, and with the savings, I'm going to invest into the stock market. So I at least have an asset that is going to be working for me consistently. And finally, the best time to buy real estate, whether it's commercial, residential, investment, or primary, is coming up right now. That is November 15th to January 5th. And that's from Thanksgiving to Christmas, Hanukkah, all the holidays, New Year's Eve. People stop working. So there is opportunity. And if an owner seller is on the market at this time, that most likely means that they have to sell. So there are some opportunities to buy really good value. So if you are interested in learning more about this, love to hear your thoughts, comments, concerns on this. Doesn't mean that this is going to go through, right? But it is something that's in the news right now that we need to stay on top of, and we need to understand how it's going to affect us as homeowners, as real estate investors, and how it's going to affect the economy for us as we continue to grow. Thanks so much. Hope this is helpful. Have a great day.